Good afternoon, everybody. Welcome to our webinar titled From Promise to Performance. Today we're going to talk about success. We're going to talk about success through servitization. In particular, we're going to spend some time telling you about servitization and the importance of servitization. And then we're going to focus upon the capabilities that firms that are really successful with servitization have in place. As we go through today's webinar, if you have questions, please enter those into the Q&A, and at the end of the session, we will do our best to answer as many of those as we can. Next slide, please. So my name is Tim Baines. I am Professor of Operations Strategy here at the Aston Business School in Birmingham, and I lead the Advanced Services Group. And I'm joined today by my friend and colleague, Tom Palmer. Tom is an honorary prof within our group. He's also the former group director of services strategy at Rolls Royce. And there's nobody I know who knows more about outcome-based business models in manufacturing industry than Tom. So welcome today. Let me first start by telling you a little bit more about servitization. Next slide, please. So servitization is not a new phenomenon. Servitization has been around with us for many, many years. It's just that we take a very much product-centric view of industry and we ignore servitization all too often. But right the way back in the mists of time, in the very early writings about manufacturing industry, servitization was apparent. Adam Smith is widely acknowledged of unpicking the DNA of what makes a factory successful, the division of labor. But Smith also recognized that value could be created, value could be realized in exchange, and also value could be realized in use. And value in use is at the very heart of servitization. Next slide. If we look at the same time, a contemporary of Smith's was Watt. Our colleagues who are technologists will very much celebrate the rise of the steam engine as one of those monumental moments in the industrialization of Western countries. But the Watt steam engine was manufactured by Boulton and Watt at the Soho manufactory here in Birmingham. And Boulton, the leader of the enterprise, was under no illusion that it was the outcome of the steam engine that the customer valued. Next slide, please. And a little bit closer to date, Henry Ford. Henry Ford, we celebrate Henry Ford for conquering the world through production, through mass production. Very famous saying, any color you want, as long as it's black. Ford embedded all the concepts of modern manufacturing, the division of labor, the standardization of operations, interchangeability of parts, the control over the factory, the moving production line. But Henry Ford recognized that it was the service that his product enabled, which was so important to the customer's success. Next slide, please. Right up to date, servitization is around us. Next slide, please. Servitization is around us. If we look inside manufacturing industry, we recognize servitization is this movement from products to services. If we go into the financial sector, we see servitization as this move from a focus on ownership to a focus on usership. And in the general management literature, we see servitization being apparent in this focus of a movement from outputs to outcomes. So this notion of an industrial firm competing not just through the products, but through the services that products also enable is an incredibly important competitive weapon for manufacturing firms. One of the big challenges is, though, how to do it and how to do it well. Next slide, please. Tom.
Thank you, Tim. It's a real pleasure to be here with you this afternoon. I think this is really, really important for our productivity and our competitiveness, and it's super interesting to see the the genesis of this and how far it goes back. Um, Many of you will know the Rolls Royce story. It's a great case study of what is now termed servitization. Uh, when I first joined Rolls Royce, the challenge was that we found ourselves in a very difficult place. After years of declining market share under government ownership, we had 6% market share, and we were in no position to really challenge our big competitors, General Electric and Pratt& and Whitney. We had to find something very, very different, and that was the beginning of our services journey. Um, we committed ourselves to disrupt the market and disrupt the market through services. We simply didn't have the spending power to try and create a competitive advantage in product, and we could through services. And we moved from the traditional time and materials model to initially an availability model where we provided services for a fixed dollar per flight hour. And this move to what people call power by the hour, although it seems tame today, was a huge disruption. It would never have come from the strategy department of our competitors, General Electric, Pratt& and Whitney. We effectively cannibalized our own parts business to create a model which meant from going from one which was based on using as many parts as possible, charging for parts after the warranty period, to one which was the opposite, of using as few as possible. We basically, for a fixed dollar per aircraft flying hour, took care of everything, all the maintenance, the availability, the spares, and driving down cost under that model was our key to profitability. And so using as few spare parts as possible was how we drove our own profit. It was a complete business model change born out of the challenge that we found ourselves in. And because it was so different at the time, it was very difficult for our competitors to copy. And it took years for them to follow us. And even when they did copy at first, they did it badly. And this gave us time to really exploit the advantage we'd created. So we took our first few sales. The first one was with American Airlines on the 535. And having established this sort of winning strategy, we doubled down. We drove down the parallel paths of capturing market share, customer by customer, while in parallel building the infrastructure to deliver at scale. And we had to invest our capital wisely. We simply didn't have the spending power of our two competitors. And so that drove us to partner heavily. We didn't have the time or the funds to build all the capabilities we needed ourselves. We partnered on finance, on digital, on core MRO, and this was absolutely key to our success. 80%, my estimate is 80% of the service activities were performed by other companies in the ecosystem in which we built. If we'd not done this, I doubt we would have been able to have built up such a competitive lead. We'd have been taken up by competency building rather than fighting customer by customer. And this allowed us to focus our investments heavily in data and in predictive technology, knowing this would be key to making money in this business model. We set up a separate predictive technology business, selling predictive services and health monitoring on our own engines, but also on competitors' engines and other products. And we also focused our investment on the product. We created a new discipline in engineering, which we call engineering for services, dedicated to designing products for this business model and dramatically improving reliability and maintainability. And this probably drove more value into the model than any other single activity we performed. We drove a customer-focused culture, an organization structure that probably would look more like a software business than a traditional product manufacturer, because that's what it takes to be successful in services. We hired airline professionals, so professionals from our customers, to help us really understand what the customer valued and how to drive the culture change. And we moved increasingly towards what we now call outcome-based services, services which are designed to support the customer's business model and the outcomes the customer is trying to move towards. And in an airline world, that is on-time departure in airline operations. So our rallying cry became, if that aircraft is powered by Rolls Royce engines, it will take off on time, it will get to its destination as planned and burn as little fuel as possible on the way. And of course, it takes a lot more than Rolls Royce to make an aircraft take off on time, but that was really important culturally and strategically to set that direction. And we knew we'd built an advantage, but we also needed to keep that advantage. And so we continued to iterate and innovate the value proposition, adding on more and more services, continued to keep our competitive advantage. We added part services, fuel consultancy services, remote site services, digital services, increasing the value of the package and the distance from our competitors. So the core of the journey for us was a really disruptive strategy, maximizing the use of strategic partnerships, data investment and driving towards a predictive model, a planned and predictive operation, engineering transformation towards reliability and maintainability, culture with the customer at the heart, and an outcome orientation. And the result was, at least during that phase of our business, we categorically won. We went from 6% market share to over 50% market share over 2 or 3 decades. A remarkable performance. And I think Rolls Royce, when I last looked, has a market share of some £90 billion right now. So if you look at the annual compound growth from when you started our services journey, that's a growth rate of 12% per annum, which is about 5% more than the FTSE average. So it was a remarkable financial and strategic success for Rolls Royce. And now, with the benefit of hindsight and meeting many other companies in different domains, I can see how transferable a lot of what we built, a lot of what we did is to other markets and other firms. So it's a really good case study to help translate what this really means in real terms. Back to you, Tim.
So,
well, I think we're going to go on to a poll, aren't we?
I think we are. I think we are.
So we have a couple of polls in this webinar for engagement and learning. And the first one is this. There should be some questions pop up in front of you. How much of your total revenue do you earn from services inside your firm? In Rolls-Royce, it's just over 50%. But if you could quickly just answer these questions on the poll right now, let's see at least the parties attending this webinar where their revenue lands, their services share of their total business revenue.
We'll just give that a minute for folks to score. And when you're ready, Christina, you can perhaps take us through to the chart.
Do we get the results? There we go. Okay, well, that's interesting. So there's a clear majority, 80% are 10 to 25%. Okay. Some outliers there with more than 75% of their revenue comes from services. They probably know all about servitization. But the 10 to 25% are on the journey. As I said, Rolls Royce's was 50%. The average, from a study that Accenture did last year, the average of all the industrial manufacturers they surveyed was 30%. So 10 to 25, so slightly higher than that. And of those manufacturers that were surveyed and had the average of 30, they all expected their service revenue to grow to 60% as a percentage of their total revenue over the next 5-10 years. So we're all on this journey and everyone is trying to grow their services. But thank you very much for participating in that. And now I think it really is over to you, Tim.
So thank you, Tom. Christina, next slide, please. So, ladies and gentlemen, I'd invite you at this stage to click on this QR code. You see, Rolls-Royce is a fabulously important case study in servitization, but it's a real outlier compared to lots of firms that we actually come across. And part of the reason for that is because of the understanding, not just of the concept of servitization and what it means, but the impact that servitization can actually have on a firm's performance. And being able to reliably report upon that impact in such a way that business leaders and economists will take notice of it and actually use that information to shape their decisions, their actions inside firms, and their policies. Over the past 3 years, we've been sponsored by the UK government to try and understand the impact that servitization is having on industrial firms. What are the drivers which are bringing about that impact? And what might we do to amplify the impact? What I'm going to do now is just tell you a little bit about the research and a little bit about some of the findings that we've actually come across. The QR code here leads you to the full report, which you're quite welcome to download and to actually read. Next slide, please, Christina. I will emphasize at this stage that although we were sponsored to do the research, we were sponsored with our colleagues at Warwick Business School, who are economists. And the economists are wonderfully unbiased. And so although we brought the skills of being able to understand servitization and measure servitization inside an industrial firm, the mathematics, the survey results, the data that they gathered was completely unbiased from our perspective. Although we are a centre focused on servitization, we're not influencing the results. What we did is to gather data from 700 firms across the UK. For 400 of those firms, we looked at their economic performance going back over 16 years. And then for 70 of those firms, we gathered them together in workshops around the country, shared our findings, shared our results, and got their input into both the validation of what we were seeing from the results and the explanation. Next slide, please, Christina. And one of the key points to emphasize here was we were not looking at the extent of servitization adoption in the UK. What we were trying to understand was how services are impacting on the performance of a firm. And this chart here just illustrates the type of data we were gathering. We were gathering performance from firms that competed entirely through products and performance from firms that were competing entirely through services that those products enabled, and everything in between. And we were also looking at the types of services being offered, whether those were base services, such as spare parts, intermediate services, such as break fix, or advanced services. And the advanced services are those availability, outcome-based, performance-based contracts, which is so well exemplified by the Rolls Royce case study. Next slide, please, Christina. What we did by looking at the performance, the relationship between that profile of firms, the profile of service revenue versus product revenue generation side of firm, and the impact on the economic performance, we were able to come up with a set of findings which are summarized by these next two charts. We're absolutely confident in these findings. And the first one is this, that servitization, the move to services inside an industrial firm, that for every 1 percentage point increase in service revenue relative to product revenue, the performance of that firm grows by 2%. So approximately a 2% growth in the sales of the firm, a 2% approximate growth in the profitability of the firm, and a 2% growth in the productivity of the firm. And these indicators are absolutely compensated for in terms of region and industrial context of that firm. And let's just put this into context. The productivity growth in the UK, and as in lots of Western European nations, is largely flat. A 2% growth from just a 1% increase, and that 1% increase might simply be selling more spare parts, a few more break fix services, grows this productivity by 2%. Next slide, please, Christina. Although this is compelling, the next statistic we find is even more compelling. Services, of course, can be of different forms. And as I mentioned a moment ago, advanced services, these availability, performance-based, outcome-based contracts, so well typified by Rolls Royce, are difficult for firms to actually realize, but they are incredibly valuable for firms also. The servitization intensity measure helps us to distinguish between a firm which perhaps earns 25% of its revenue from services by spare parts versus a firm which earns 25% of its revenue from services, and a portion of those services are these advanced services. So as a firm grows its advanced services activity within its services portfolio, its servitization intensity increases. And we have an index for measuring that. And a 1 unit increase on the index is typically something like a 3 to 5% increase in service revenue from advanced services. But that 1 unit increase impacts upon the growth of the firm by 5% and impacts up on the total profitability of the firm by 8%. So this move to advanced services is absolutely compelling. The argument that services are key to the success of an industrial firm is absolutely one. It's really a case now of asking, so what does an industrial firm need to look like? What capabilities does an industrial firm have to have in place to succeed through these more advanced services? And at that point, I'm going to hand back to you, Tom, to tell us about those capabilities.
Thank you, Tim.
Please, Christina.
Next slide. So that is really, really clear evidence of the business case for advanced services, reinforcing everything we've experienced and learned. For me, statistical proof that services, particularly advanced services, drive competitiveness, top and bottom line improvements for the company. Proven. It's a really huge step forward. And the question now becomes not if, but how. And as Tim really mentioned, apart from a few exemplars, maybe more than a few, but many companies have really struggled to pull off this strategy. It's hard. It involves changing so many aspects of the business model. I went through that in my case study earlier. We changed everything from culture to systems to processes. And firms struggle to get started. And then in particular, they struggle to scale and tend to stall on this journey for very similar systemic reasons. I've come to appreciate and learn working with now many companies since leaving Rolls Royce, that beneath quite a thin layer of domain-specific activity or industry or product-specific activity, because every industry is different, every product is different, much of the infrastructure and systems and capabilities that are required to deliver advanced services are common. Which is great. It means that, to move forward with confidence and at pace to accelerate in this journey, we can start to build methodologies, methods, frameworks that capture experience and guide companies along this journey and avoid the pitfalls and failure modes that so often trip us up. And this model is a great starting point. This is the Advanced Services Group's business model journey. going through four stages of business model evolution from explore, engage, expand, exploit. It provides a intuitive and practical storyline for progressing servitization. And each phase has a clear set of strategic actions. In Explore, it's all about building a coalition, landing on an argument, gathering initial resources. In Engage, it's about discovery, it's about hypothesis of value for the customer, it's about piloting. And then in Expand, it's about moving from pilot into strengthening the capabilities to deliver, getting the investments that you need, rolling out the model. And then Exploit is about adjusting the portfolio, optimizing delivery, driving scale, institutionalizing, leveraging, commercializing, commoditizing, driving cost out, and exploiting what you've built. And this is a very useful playbook. And while the roundels, these bubbles, do a good job of explaining at a very high level what you need to do at each of the stages, they don't really explain how. And so we need to build the infrastructure, the operating model to enable this journey to happen in practice. We basically need to sort of turn our attention now to operationalizing this journey. And that's where our focus is now turning to, operationalizing servitization, so that firms on this journey can get there faster and with far less risk. And so supporting these roundels, we're building the operating system, starting with the capabilities that a firm will need. And we've developed, we'll come on to this in a second, we've developed a capability model for advanced services that is rigorous and accessible, and which combines academic insight with real industrial experience from companies like Rolls Royce and Alstom. The model is in two parts. It's quite unusual in this respect. These sort of capability models don't often do this. This is really important in the area that we work in. The model is in two parts, what we call developmental capabilities. Those are the capabilities that help us set up and innovate the model. And then operational capabilities, which are the ones that help us run and deliver it. Hold on a second, Christine, you're going a bit ahead, but um, yes, and both of these, I'll catch up now with this. Both of these are key to success, both the developmental capabilities and the operational capabilities. Developmental first. So for developmental capabilities, they're about innovating and startup. So of course they're more prevalent. We activate them at every stage, but they're more prevalent in the first two roundels. Hence why we put a red block around it here. So now go on slide further, Christina. And then this is an extract from the capability model that addresses these innovation creating developmental capabilities. It's the only model that I've seen that really understands advanced services and addresses the entire life cycle from the first service design through implementation and scaling. And this extract shows the developmental capabilities across each of the four journeys in those roundels. And in the bottom, in white, underpinning this innovation are a set of what we call enabling capabilities. These are the foundations that make innovation possible. You can't innovate if you haven't got the basics in place. And so these are the foundational capabilities needed to underpin the innovation of advanced services. So developmental capabilities cover areas like creating the service offer, setting up the pilot, setting up the initial organization structure, continuously innovating across the life cycle, responding to feedback from the front line to make improvements, and continuous improvement of operations. And so for each capability, we have the card, if you like this, that describes what the capability is, the KPIs, the maturity of that capability. So when we use these with companies, they can really understand where they are today, where they need to be, and how to bridge that gap. Next slide, please, Christina. So the second phase is these operational capabilities. The capabilities describe how to run the business day to day. And of course, therefore, they dominate more in the second phase, in the second two of these four stages in the journey. Although a level of innovation is still required, of course, in every stage. Next slide, please, Christina. You can't really read it. The operational capabilities, those that describe how to run the business, are here. And they are the capabilities that are needed to deliver and scale. And then again, in white at the bottom, we have what we call integrating capabilities. So whilst operational capabilities show what must be done, integrating capabilities ensure all parts of the organization move in sync. They do it together and it all lines up. So if you look a bit deeper, the model sets out the capabilities that are required to run advanced services at scale. The focus is on consistency, quality, profitability. In this model, they span the entire operating system, performance, processes, fulfillment, facilities, partnerships, digital, they're all in there. It helps us understand where things can go wrong, how execution might be struggling, whether it's in billing or misaligned KPIs or weak analytics, and helps them to understand what interventions are required to fix it and get back on terms of the operation. Each capability we can define in terms of its maturity, its KPIs. And so again, when we work with companies can understand where they are today in the capabilities which are really important to them, how to prioritize, and what good looks like at the various journeys of this, various stages of this journey. And these capabilities are the building blocks. They build the operating system that supports the journey to advanced services. And the model helps companies understand where they are, where they need to be, and what is required to accelerate and make progress. So that's the capability model. This is sort of like the first stage, the first method and methodology to help us operationalize this journey. And using this, we can really help navigate the way forwards and measure progress against industry standard benchmarks. Okay, we've got another poll now. If you want to go to that, Christina. We would like to understand where you think you are in terms of developing and delivering advanced services. So there are two questions here, both aligned to each of those two of the sets of capabilities that I outlined, developmental and operational. The first is, do you think in your business you have the capabilities to innovate advanced services? Yes, partly, not yet, I'd like help. And secondly, for the second stage of the journey, extend and exploit, do you have the operational capabilities to deliver and scale advanced services? Yes, partly, not yet, I'd like help. So we'll spend a few seconds, just click on the button that you think most closely relates to where you are, and let's see what feedback we get.
And while we're waiting for that, folks, if I may just add that these two sets of capability maps, the capabilities to innovate these services and the capabilities to run these services, incredibly important tool, not only for the firm itself to understand what's needed and gaps it might have, but also for the firm to benchmark itself against others. And when Tom and I first started talking about mapping these capabilities, we came up with these hypotheses based upon Tom's experience at Rolls Royce and Alstom, contrast against the research literature, to develop these two maps that we've shared with you today. Of course, there's an awful lot of capabilities, far too much to go through the individual ones in detail on a webinar such as this, but really very powerful, as we found subsequently with firms, to really flesh out where the firms are, gaps they've got have, and how they compare with competitors.
Thank you, Tim. Do we have some results? Okay, so how ready are you to develop and deliver advanced services? So this is the first question. Capability to innovate. Partly, not yet. Nobody wants any help.
So we've scared you off.
We're happy to be partly there, but we don't want any help. Partly, so that's the majority. 60% have partly got the capabilities in place. Okay. And the second question, do you have the operational capability to deliver and scale? I can't quite see that. Do I scroll to find that? Okay, here we go. Again, similar. Okay. So partly not yet. So 4% yes to scale, 25% yes to innovate. So 25% of the participants thinks they've got the capabilities to innovate. Almost none think they have the capabilities um, to scale and deliver. And at least at least one person would like some help. So that's good. That's good news. Which doesn't that makes sense because of course the participants in this webinar are probably some way down this journey already, so they're more likely to have capabilities that pertain to the early stages of the journey, such as innovation, than they are with the latter stages. And very few believe they've got the capabilities to scale and deliver. And that's absolutely normal. And that's what we're finding with many of the companies that we deal with today. They really struggle at the point where we've got some pilots running and we've had some success. The customer's interested, but how on earth do I scale this efficiently and without creating huge complexity and numbers of people and new systems? So that is exactly why we're focusing now on tools and methodologies to help companies do exactly that. Back to you, I think, Tim.
So I'll move us towards the conclusion, Christina. So, ladies and gentlemen, we've been through a process of briefly introducing servitization, talking about the impact that servitization is having on the performance of firms. And then we've examined capabilities. We've told you a little bit about the work that we've been doing to understand the capabilities that firms have to have in place if they're going to successfully innovate these services and if they're going to successfully run these services once they're actually in place. Of course, as this whole area of capabilities is at this level of resolution, this level of detail, is a new area of research for us all. So if you are on that pathway of developing these capabilities and you want to perhaps look at some of the tools that we've got, have developed through the research activity to benchmark yourselves, then by all means, drop us a note. In a moment, we will share contact details. Always really interested to hear from firms who either are identifying capabilities that they have and are thinking them through and how they might put them in place, or those firms which offer capabilities and are looking for the opportunities to exploit them. So if this topic area is of interest and you want to see some of the maps that we've been producing and some of the tools, then do come to us and we can talk about that. So at this point, I will stop and hand over to Christina. Christina, would you like to come on screen? So my
hello, everybody.
colleague Christina, who has been behind the scenes all the way through this presentation, keeping us on track. Christina, is there any questions that have been
Yeah, we have a few questions, 3 questions. Don't be shy. Please do send in some more. So we have one from Harry Martin. What are the greatest barriers to servitization by a manufacturing firm, and how should they address these? A little question there, Tom.
Yeah, I think it's over to you, Tom.
Well, I'm sure we both have a go at this. The biggest single barrier in my experience, and I found this myself, obviously, but everybody I've spoken to subsequently is trying to manage 2 business models at once effectively. The service model is a very different business model from the product model, And when we work in a product manufacturer, we inherit a system that already exists, and our job is sort of optimizing it and driving it. When we start services, our job is to sort of create a new model. And that brings all sorts of tensions and conflicts between one model and the next. Because the new model, as I sort of described in my case study, requires its own processes, its own systems, even its own culture. And navigating that and evolving that and keeping those two things from, well, the product business basically from swallowing the service business is the biggest challenge that most find. And it results in operational issues, but of course also cultural issues and this potential disconnect between the two.
And if I can add to that, Tom, so what to complement what Tom said, when we were producing that methodology that Tom shared, which was talking about the route planner, the playbook for servitization. The research that the research team carried out was really quite in depth. See, we studied 34 organizations worldwide who had progressed with their journey into advanced services with different levels of maturity and had different finding different results. And the team went out and it mapped these processes in detail. So we, for example, spent time with Caterpillar in the States, MAN in the UK, Alstom, Rolls Royce, a whole variety of organizations. And mapping out how firms have actually done this and the barriers they were facing, the failure modes that Tom was talking about. And what we were then able to do was we were then able to dissect the evidence and really get underneath the surface of what successful transformation looks like. And of course, we will often hear people say, oh, it's business model innovation and it's all about business model innovation, or servitization is organizational change and it's only and all about organizational change. And of course, servitization is both. It's both business model innovation and organizational change. And those firms which do it successfully, some of the firms that we work with now, like Tetra Pak, for example, and Thales, they've really mastered this process of incubating the business model innovation in an industrial environment which allows the incubation to take place. And only when that incubation has actually demonstrated the potential of the services business model, use that evidence to pull through the organizational change. And that's why when Tom was talking about the two sets of capability charts that we've actually got, how one deals with the first part, one deals with the second part, is to respect that this shift from only being focused on the business model innovation to then being focused on the scaling and organizational change and managing that interaction between the two. Where firms do fail is where they get that wrong and they try and push through the organizational change. They get very frustrated, people leave, the results are very slow. If they start trying to push organizational change without the evidence to support the change, then it falls over. So using the business model innovation to pull through the change, that helps to overcome some of that challenge that Tom is referring about dealing with the business model innovation within the existing portfolio of product-based business models. Thanks, everyone. Christina, is any?
Yeah, we have a question from Johan Morel who says, hello and thanks for the webinar. You mentioned maximizing strategic partnerships. What did you mean by that?
Tom?
Yeah, so in the Rolls Royce case, as I said in the case study, we relied on partners to do probably the majority of the actual delivery. We did very little of the maintenance and repair ourselves. We partnered that. We set up joint venture companies, but also other sort of suppliers or partners. We partnered our digital journey. We didn't do it ourselves. We set up another joint venture company for that. We partnered on finance, on the financial aspects of leasing and financing assets. We didn't do it ourselves. And so for most of our activities, we partner with other companies. And we did that because we didn't have the capabilities ourselves to do those things. We would have to have grown them ourselves. We didn't have the balance sheet to do all those activities. And that was incredibly important to our success because, as I tried to explain, it allowed us to focus on those things that only we could really do, like get the product right, and like driving some of the custom interface work that we did and custom interface innovations. And so that was a key part for Rolls. And as I talk to companies today, I try and persuade them to think differently about this part of their business. We're not, as manufacturers, used to partnering like that. The services model is a different model. If we're going to drive pace and resilience and lower our risk, then I would advise looking to do ourselves only those key activities which really only we can do and drive value, probably to do with the product, the customer interface, innovation, just like we did in Rolls Royce, and look first to where can I get help with the other capabilities I need to build out the model, because that way you go faster and you can tread with more security in where you're going, particularly in the front end of your journey, where you don't really know what's going to work long term, where the competitive advantage is going to be long term. So partner early, but regularly review that strategy because it may be at some point you think, right, we're going to bring this in house now. We've been able to incubate it with a partner, but now this is something where we can get real competitive advantage. On the other hand, you might find something you thought was going to be absolutely key is no longer and is commercialized externally, and you can partner that. So try and find a relatively lightweight capability structure, organizational structure in the services world, so you can move at pace. That's what I meant by strategic partnerships.
Yeah.
We have another question from Louis, who is wondering about Industry 4.0, as this still seems a popular trend in manufacturing companies. What intersections have you discovered between Industry 4.0 and servitization?
Okay, so it's Industry 4.0, of course, is a technology lens to look at innovation, first of all. And of course, as I illustrated at the beginning, we can take a services lens to look at the different phases of innovation. But taking that technology lens, where you get to the stage where you are looking for digital capabilities inside the firm to actually control the assets of the firm, to control the organization, and really maturing of those digital capabilities inside the firm. That's a very strong foundation for the subsequent using that digital capabilities to actually extend the services portfolio of the firm. So I see the two as very consistent. We should be mindful that Industry 4.0 is a largely of European origin. If you in the States, they might talk about IoT a few years back in particular, but they're all supporting this innovation of these more advanced services through the digital capabilities. They're helping to de-risk it. Is that okay, Tom? Is there anything?
Yeah, I think it's a good idea. But the only other thing I would say is extension of Industry 4.0 to the service network, to the overhaul network, particularly maintenance network, can be extremely powerful. I don't think I've seen it done very, very well yet, but the concept that in-service data, particularly in-service repair, maintenance data, can really be shared and drive design improvements in a seamless way is a powerful one. I think it's still to come, but Industry 4.0 is a powerful concept when extended out to the services ecosystem.
Yeah, I agree.
I think we have time for one more. This is another one from Harry Martin, looking back at the big business case for servitization report. He says the report illustrates the clear benefit advanced services offer for customers. So why aren't customers demanding them more?
That's a very good point. I think to answer that question, well, there's two things. To answer that question, first of all, we need to look at very much the origins of the servitization research and attention which has been given to servitization. For a whole raft of reasons, in the UK in particular, we focused upon the firm providing the product and helping that firm to innovate and actually provide the services which complement the product. But for a whole raft of reasons, that's been our starting position. There is, of course, the very compelling argument that if you look at the customer's perspective, that may be a better place to actually focus at your work, because that is the basis of potentially customers pulling through services. What we found in the big business case report was that very often the firms were saying, look, this is the impact the servitization, well, this is the impact the services are having with us. But the biggest beneficiary is the customers themselves. And our work now is very much moving into that world, into that customer's world. I know that some customers are pulling outcome-based. Some customers, particularly those in the tech sectors, are very much pulling outcome-based. I know that Rolls Royce in procurement procures a lot of outcome-based, have learned from what they're doing with their own customers and are pulling outcome-based from their own supply chain. I suspect that one of the challenges that we have is that if you think about the industrial sector, we have matured the language. We now understand the concept better. I think that is a job to be done actually in the customer sector. But that's where we're going next with a lot of our research work, actually looking at stimulating that customer pull, better understanding, stimulate the customer pull. Okay.
Okay.
You want me just to wrap up, Christina, with the final slide? Would that be okay?
I think so, yeah. We've got a couple of questions, but we'll get back to you after the webinar on those. Thank you.
So is there a final slide with contact details on?
There is.
Okay. There we go, folks. So we very much enjoyed presenting the work today based around looking at servitization, the impact of servitization, and of course, the capabilities that firms have to have in place if they're going to succeed, not just through services, but also through these advanced services. We're very interested in hearing from firms which are experimenting with capabilities, testing capabilities, struggling with capabilities, or firms that offer capabilities. And if you'd like to contact us, please approach us. These are some of our contact details. Pop an email through to us, and if we can help with any of the work on capabilities and servitization in general, we will. So finally, to thank Tom for spending time with us today. Thank you very much, Tom. Thank you, Christina, for arranging this webinar. And to you, ladies and gentlemen, for spending this afternoon going through this webinar with us. We do hope you've enjoyed it, and we look forward to hearing from you. Thank you. Bye-bye.
Bye-bye.